Hey everybody, it's Pete. Welcome to Stocks for Breakfast, where we're going to set up the entire week of trading this week. If you're new to the channel, what we essentially do is we take a look at the roadmap for the coming week and we map out the types of trades we're looking for. We're looking at what the market is doing and then how that market setup translates into initial position size, which stocks are going to be looking to buy. I want to be super clear though. We kind of set the tone here today about we're making a prediction of what's going to happen in the market this week. And I want to be blatantly clear about this. Predicting is a very, very difficult way to make a living in the market. As a matter of fact, I'm even going to take it a step further and say that it's absolutely not necessary. And this is the difference between being a trader and probably being an investor, quite frankly, where traders are looking at what's happening and they want most of that to continue. And then we kind of build what we call arguments. We look for clues around what is happening and how do we validate that it's still going in that direction? So I'm actually going to kind of take a shift. We're going to slide over a little bit today. We're going to go into the options market, and we're going to take a look and see how the options market has kind of led to what I'm calling the prediction for this week. Now, I want to be very clear. The prediction, I keep using that word, the prediction for the stock market I'm making is for this week only. Now, here's the big part that I really want to bring across here. What I am talking about right now is my game plan going into the week based on how the clues unfolded last week. Now, here's where we get this all the time. Somebody's like, oh, you made a call on a stock that blah, 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 and it didn't work out. These are the clues going into the week. Here's the part that is critical, that I don't care if you're a part-time trader or a full-time trader, it doesn't make a difference. You need to make a list that says, if this happens, then I plan to do this. Here's the part that a lot of people miss. If this happens, and then I plan to do this. If this part does not happen, do not trade. That's the part that a lot of people have a hard time with. They build up in their mind the I did the hard work, therefore I must place this trade garbage, right? That's not what trading is. I want to be super clear about that. We're also going to talk about some earnings reports that are coming out this week. We're going to talk about economic data that's coming out this week. And I want to be clear, and this is really important. I don't care if you have a full-time job, you only look at your 401k once in a while. I don't care if you run a business. These are still things that you should at least have in the back of your mind to know what's going on this week. And I'm going to tell you why. There are certain pockets of opportunity in the market where it's time to maybe get a little bit more aggressive with holding positions a little bit longer. So again, establishing the kind of profit targets you're going after. There's times when you should lower your risk, increase your risk, those kinds of things. And that's what we're going to talk about today. We're going to keep it super high level, and we're going to just make you aware of what's happening this week and why. But the very first thing that we're going to talk about is why I'm using that prediction term for this week, because it's something that interesting that happened in the options market that had my entire community basically saying that's not supposed to happen. And when you see something that is not supposed to happen, that's also a clue as well. So stick around. I'll be back in just 1 second. All right. So the one thing I do want to ask for is if we do a good job for you today, if we kind of gave you some information that was helpful and whatnot, please do me a favor. Hit that subscribe button, because if I do a good job and I know that I'm helping you, that actually gives me clues for what you like to see, and I'll add more of that in there. First, we're going to start out with what happened in the options market this week. I got to share my screen here, and what actually it means. Now, for those of you that might not be trading options, one of the primary indicators that people watch is called the VIX. It's known as the Volatility Index. You can actually see how it spiked here, right? Now, one of the first clues that we're looking at is how you can see here, it was continuing to make lower highs, right? Now, if you are new to using this indicator, if you're new to using the volatility index, and again, it doesn't matter if you don't trade options. If you trade options, you're probably a smarty pants and you know exactly what it does. But to put it into simple terms, it's known as the fear index. And essentially what happens is options market makers price options up or down based on the volatility that they are expecting going forward. And I believe it's over the next 30 days. If somebody's an options guru, you can tell me, type that in the chat. I'd love to hear from you. So essentially what happens is as the VIX goes up, Options market makers are expecting more volatility. They increase the price of those premiums. And generally speaking, when the VIX goes up, stock prices come down. So they actually work in the opposite direction of each other. So two clues that we're actually noticing here. So the first one you can actually see over here is they were slowly making higher lows. So the standard for where the VIX was slowly kind of creeping up, right? So that was the first clue that something different was going on. So if you've been a regular viewer of the channel, you know we've been very adamant that as the market was going up, we started to see very heavy volume traded in the S&P 500 on down days. I want to repeat this because it's very, very important. What I want to get across here today is kind of like raise you above all of the noise that you see on, whatever channel you watch or read or all those kinds of things. Everybody's putting out content, and you really want to be able to focus it all the way down to say what matters. What matters and how do I make a decision on that? So before we kind of dial into what we're talking about here in the VIX, I want to talk about the S&P 500 and the SPY. In case you didn't happen to see it, while this thing was kind of cranking to the upside, even in this area over here, still looking pretty darn good, right at all-time highs. But good traders that are with me here at 7:30 in the morning who really do their work, you want to add a little bit more to that. And when we start to add volume into this, as it's making new all-time highs, even the most brand new trader to the stock market can see that the heavier days were bearish. The heavier days were days of selling. So even on the way up here, there were clues that the stock market picture was changing. So this is the biggest thing I want you to write down. I don't think I have a here you go, post-it pads. We always have post-it pad moments. You want to write this down. Accumulation and distribution happens usually over a 20-day period, a rolling 20-day period. And what you're looking for is where is the dominant side of the volume during that moment in time. When you're pushing to the upside in a bull market, you want to see heavier volume on the move up, and you want to see light volume where the institutions take a break and they let the stock breathe a little bit before they start to step up. So there's a push on heavy volume and a pause on light volume. But when you start to go sideways after a move up or a move down and you have heavy volume, that's known as accumulation or distribution. So you push up, sideways heavy volume is distribution. That's where money is changing hands and likely going down, which is what we saw in the S&P 500. If you push down and go sideways on heavy volume, that's accumulation, and that's one of the super easy clues to recognize before a stock pops. So I just want to give you a little kind of insider clue into some of the research that we do. Every single day, we do some research for the community, and we list out the stocks that show bullish accumulation days and bearish distribution days. Now, these aren't stocks where you just necessarily go in there and say, I'm going to buy those, or I'm definitely going to sell those right away. Remember what I said, we're looking for that over a 20-day period. We're looking for clues. We're not looking for answers. So that's the first clues that the market was kind of rolling over. Plus, we were making higher lows in the VIX. So we had multiple different clues that the market and the tone of the market was changing. Now, what does that mean? What does that mean for you and me as traders, right? Now, again, everything we're talking about here is for educational purposes, but I want you to really start to understand how to make informed decisions. So if you have a nice trade to the upside and we start to see these clues, what I do is it now means that I'm changing my trade management. So in other words, if you see exactly what you're looking for, a nice push and a light volume pause, a nice push and a light volume pause, everything is good. So it's kind of like driving. There's nobody on the road, or maybe just people kind of like tapping their brakes and you're still good. But when you start to see it's getting cloudy out, it rains, everybody's got their lights on, you now need to make a different decision. And that's what actually started to happen when the VIX started to slowly grind higher and when we started to see those heavy volume pushes in the market, right? Big change in the market. Now, what does that mean? Does that mean I'm going to get in there and sell everything because I saw something? No. What it means is that proper trade management is that you will move up your trailing stop loss because the conditions changed. Now, when the market looks beautiful and everything's perfect, you kind of give it a little more breathing room because the situation has not changed from a price action and a volume perspective. So push up, light volume pause. Everything looks good. When that changes, our trade management changes. Now, what does that have to do with the prediction for the market this week? Well, When we were pushing down last week, we had 5 big red days. Something changed. What was supposed to happen did not happen. Very important. So what we're talking about right now in the VIX is the VIX actually had a pretty big down day. So you can see here that when the market was going down, the VIX was also going down. That's not what's supposed to happen. What's supposed to happen when the market goes down is the VIX is supposed to go up. So this is a clue that Friday's price action exhausted itself. Now, the second clue for the SPY, we're going to add something else in there, volume. We had this large 5 days worth of selling and a very big, large volume day on Friday. We tend to look at that and we want to know what was the average volume and what happened. Now, here's the thing. Now, a lot of people might be saying to themselves, well, a big volume day means it's going to continue, right? That's heavy volume going down. That's what you want to see in that direction, right? Well, not necessarily. Here's the thing you want to write down. Again, another post-it pad moment, right? Where the volume happens matters. So in other words, when a stock is kind of just trading here and it blasts off out of a trading range, that's good volume to expect follow through. But if what you're looking at has already made a significant move, and then after multiple days of going in that direction, you see a massive expansion in volume, what I call exhaustion. A lot of people might call it a cleanup print. Some people might call it capitulation. Basically means the same thing. But when I had my trading firm, I always kind of like to have my traders have like these visualizations of what price action does with volume and what does that mean. So exhaustion means the likely end of that push. So when we combine a heavy volume push ending in that big red candle in the SPY, and I'll pull it up again, which is what happened here, and what the VIX did, which is what was not supposed to happen, we now have clues that the short-term bottom in the market is unfolding. Now, here's where it gets very specific. Okay, now I want to walk you through what I was talking about here. Now, again, more clues. You can actually see sector-specific ideas where there's a little bit more green. The iceberg is not completely below the water, so you can actually see here consumer defensive stocks and utility stocks. But more importantly, we also have financial stocks in here. We're going to take a look at that in a second. So what I want to really talk about right now, let's use Shay as an example. Good morning, Shay. How are you today? Hope you have a great week this week. When we are setting up stocks that we're looking to buy for the coming week or month or whatever time frame, but we kind of block it off in 1 week parameters, is the very first thing we want to look at is what did the market do? And in this case, we like to look at what we call the three majors. The three majors are the S&P 500, the NASDAQ, and the Dow. And then beneath that, you have all the individual sectors. So what you want to do first is you want to say, what did the market do? And in this case, the market went down really in an aggressive way last week. And again, I just want to show you so it's a visual inside of the video, just in case anybody's watching this a little bit later. So you can see what the market did, right? So the market did not perform well this week. So we're not looking to be a buyer of stocks that did what the market did. We're actually looking to do the opposite, which is dig a little bit deeper, go on that nightly treasure hunt, and look for ideas that showed relative strength last week. So that is where I'm starting my list of stocks to buy this week, is making a big list of stocks that defied what the market did last week, and in trading terms, that's relative strength. So for me right now, that list of stocks with relative strength is this one. And you can actually see here the financial sector actually had a pretty decent amount of stocks that were strong when the market was weak. We can also kind of take a look over here and see consumer defensive, Pepsi, Philip Morris, and a couple of other stocks in that sector rallied when the market went down. Obviously, utilities are in that group as well, and some energy stocks. So the very first thing we want to do heading into this week is say which stocks had buying pressure when the market got clobbered. Very, very important. Now, here's the part that a lot of people miss. They kind of watch right up to this point in the video, and they're like, you said the market was going up last week. That's not what I'm saying. What I'm saying are the clues are pointing to a short-term bottom. But now that's just the order flow part of it. The next part we need to understand is the tape reading part of it. Tape reading in its purest sense, and I believe Linda Bradford Rashke gave me this definition probably 20 years ago now at this point, where she was very simply said, tape reading is price moving closer to or further away from a reference point. Now, big definition, right? But what does that mean? Well, it basically means, can you tell better than anybody if that stock is strong or weak? Now, how do you know that? You know that better than anybody when you bought a stock. When you bought a stock, you have that reference point. It's your entry price. And you know if it's going up or down, and nobody on Wall Street knows that stock better than you. But if you want to elevate your analysis of the market, if you want to elevate how good you are at reading price action, you need to pick a level before you get into the trade to say, that's what I'm measuring it from. So you know your entry price. What if you're not in a trade? Then you need to say, how strong is that? Now, some people might use a moving average. Some people might use whether it's strong from yesterday. That's not enough. What you need to do is have multiple stages that you are referencing it from. So is it strong for the last month, strong for the last week, strong from the Friday, strong from today's open? The more of those reference points you could put into the argument, the more conviction you will have, because a lot of things are on the same page. So how does that tie into this week? Well, what I want to say is I now have my analysis heading into this week, but now I need that analysis to be validated by price action. That's really important. So what I am looking for this week is Monday's opening price. And essentially what we wrote there this week, I just want to read you what we put into the newsletter this morning, because it's kind of important. All right. So does that mean that we'll be buying stocks when the market opens on Monday? No. We need validation, and that's where our tape reading skills come into play. We have a clue, and now we look for validation. Okay, so I'm planning on nibbling on strong stocks this week and probably a deep decline in the energy stocks. Now, here's the important part here. The SPY was positive by over 10% to end March. So again, what we're doing here is we're reading the tape and we're giving price action context. Now, I just want to come back on the screen just 1 second here because it's really important. Raise your hand if you think the stock market sometimes can be overwhelming, confusing, and just too much to look at, right? I've been there. Trust me, I've been there. So what I'm walking you through right now is how to bring all of that chaos down into something very easy to recognize, very easy to say, from that price, I can tell if it's strong or weak. The problem that people have is they're only looking at prices going up or down, and they don't have a line in the sand. They don't have a price that says, I'm measuring it compared to that. So if you learn nothing else about the stock market this week, that's the essence of tape reading. But you already know how to do that. And I want to be super clear about this. You already understand how to do tape reading or read the tape as soon as you put on a trade. What I'm trying to teach you now is to do that before you put a trade on, so you make an informed decision within the time frame that you plan to put the trade on. So a day trader might have a different reference point than a swing trader. Some day traders might use VWAP, volume weighted average price. I'll show you what that looks like, because if you don't happen to be day trading, it's kind of fun to look at. So let's take a look at the SPY. Volume weighted average price is exactly what it means. It is the price that the most shares traded at and the average of all of that. So you can actually see VWAP was going down all day on Friday, and price action in the S&P 500 was below it. If we kind of head over to something else that was strong on Friday, you can actually see American Express was very positive above VWAP, volume weighted average price. So the volume is the key part there. So what I'm really trying to say is that it's a reference point. So whether you're looking at American Express, or you were looking at Boeing, or you were looking at the S&P 500, VWAP gives you a reference point to say, based on that significant level, is price moving closer to or further away from that in a meaningful way? So if we look at American Express, the language that we use is there was separation. Now you could even take this a step further. Let's say that you go out to the weekly chart. You can say that there was separation from Friday's price action from the previous close the week before. So what we're trying to do here is we're trying to get you to focus on saying, where am I measuring how strong or weak something is? And that's kind of what I'm tying back to what's going on in the S&P right now. So if we go back over to the S&P and we take a look at it, the SPY was positive over 10% to end March. So what are we doing? We're putting it in a frame. We're putting it into a reference point. That number declined by 50% over the most recent move. The bearish bias seemed like it happened fast, but we discussed distribution for at least 4 weeks before it happened. Now, again, that's very important. If you're a regular viewer of the channel, you know that. You know that we kept talking about distribution, so this did not shock us at all. Well, another prediction? No, it was hard work. We put the clues together. And I just got to keep coming back to the screen because this is really important. So many smart people in the market, stock market specifically, are always trying to be right. And we want to prove our brilliant analysis. And that's a really expensive thing, because once you start to get into the mindset that I'm right and the market's wrong because of how hard I worked on this, you can tend to not see when it changed, and you tend to hold on to losing positions. And actually, I'll give you an example in a stock that's reporting earnings this week, which is Tesla. A lot of people love Tesla. A lot of people are in love with Elon Musk. And look, for good reason. The guy's a genius, right? But the stock and the earnings story has changed. So are we looking for answers, or are we looking for clues? The clues are margins have shrank. Prices are coming down. That's a big deal. Everything that he's put into the robo-taxing thing has not come to fruition yet. I'm not saying whether Tesla's going up or down. What I am saying is when you start to hear margins shrink and lowering prices, no matter how much you love Elon Musk and how much you love Tesla, you have to admit that the story has changed. So when we're talking about reading the clues of the market, it's our job to do a simple analysis and say, is the reason I liked it still valid? Now, I just want to really, want to emphasize that. Again, I don't care if you're working full-time, managing your 401k, running a business, it doesn't matter. Whatever risk you have on in the market, whatever positions you have in the market, it's very important for you to know what could potentially change that opinion that I have. What could potentially disrupt why I believe something to be true? So now the next part of what we need to pay attention to, besides the earnings in some of those stocks, and again, Tesla is scheduled to report earnings this week, is economic data. Now, if you remember last week, we discussed some of the economic data that came out, and we mentioned that the Federal Reserve, Jerome Powell, is kind of stuck between two different things right now. They promised everybody they were going to lower interest rates, but the economy remains strong, which is not a good thing to lower interest rates. And we also have inflation is remaining what they call sticky. That's also not coming down. So that's the past. Now, this week, we have two announcements that will affect both of those things: the economy, measuring the economy, and measuring inflation. If both of those numbers come in a way that is less bearish, there's a good chance that could add rocket fuel to the upside this week. Now, again, I'm not saying it's going to. Good traders put these pieces into the puzzle and say, if this happens, then this. If this happens, then this. So we're adding parts to the equation. So what I'm talking about right now is the economic data that's unfolding, and we need to know these things. So from a risk management and a trade management perspective, on Thursday, the GDP numbers quarter over quarter are coming out, and initial jobless claims. But GDP is a measurement of the economy. Now, one of the reasons the market rallied last year, the stock market rallied last year, because of the possibility of the Fed lowering interest rates. They have not been able to do that because the market and the economy and jobs have remained strong. Inflation has remained strong, so they can't lower them yet. If gross domestic product, GDP, happens to come down on the scheduled report on Thursday, and on Friday, core PCE, personal consumption expenditures, which is what a lot of people call the Fed's preferred gauge to measure inflation, if this is coming down as well at a percentage that the market likes, Then what you're going to read this week, a lot of, is that now that kind of opens up the door for the possibility of the Fed starting to lower interest rates. They have not been able to do that, which is what everybody's looking for. You just think about it. If interest rates come down, companies spend less money to borrow, and then that should lead to profits. And the expectations on earnings this quarter are through the roof, which is why some of the stocks have been taking a hit. So what I want to kind of get into your mind now is that if you have swing trades that are kind of floating on slightly positive, slightly negative, you need to know this is happening this week and make a decision before these announcements. Are you in a trade that has a big enough head start that if we pull back, you can withstand that, or do you even want to stick with it? Some traders reduce position size. Some traders wait for the announcement to come out. Like me with earnings, I prefer earnings to come out and then hop on board. I just kind of find it easier, and I sleep better. I don't play that earnings game as soon as it announces. So what we're kind of doing here is we talked about what happened in the market. We talked about volume in the market. We talked about sectors are starting to show some signs of life, right? We showed you that screen. We showed you that the VIX did something it was not supposed to do when the market went down. More clues for a short-term bottom. So now we get back into the tape reading part of it, because this is the part where everybody on YouTube randomly posting, you were wrong on Monday. This is how we're mapping out the week. If it unfolds according to the way we're looking at it right now, we will get in there and be a buyer with conviction for stocks that are strong. And again, I showed you that list of stocks. You might want to take a screenshot of this. This is the list of stocks that I'm going to be starting looking at this week. But I still need price action to validate my argument for the week, the clues I'm putting together for the week. So if these stocks from Friday's close into today's price action remain valid, so in other words, if they stay positive and continue to show that relative strength, I'll be looking to buy these stocks. Now, not all of them. That's the point. Like a lot of people I noticed that stock up in the top left-hand corner and you said you were going to buy it. We still need validation after the market opens. So now when Monday opens, we now have tape reading to do. We say, okay, are those stocks that were strong last week still strong? And then we dive a little bit deeper. And that big list now becomes a smaller list of stocks that are doing what we want them to do. This is where traders get in trouble. Well, it was in my list, I have to buy it, but it's going down. But it was in my list, I have to buy it. No, you don't. It only should be in your game plan if it's doing exactly what you expected. Stay away from the ones that you did all that hard work. Leave them alone if they don't perform the way you want. So now that kind of brings us to the next step. Which stocks meet that criteria, right? So now we're going to work our way down into that list just a little bit deeper, okay? All right, so first thing we want to do, again, when we go into our sector rotation, we want to start to look for clues of where buying pressure unfolded. And you can see over here, over the last 5 days, consumer defensive stocks actually look pretty darn good. And financial stocks started to look pretty good. Now, the other clues we'd be looking for are stocks that are showing less bearish momentum. So communication services didn't quite go positive, but showed some signs of life. And consumer cyclical also showed some signs of life. So these are the clues of where we're going to start to look at some ideas heading into next week. So if we take that even a little bit further and we start to break down individual ideas, we know that the economic data is coming out this week. The next thing we need to do is pay attention to which stocks have earnings coming out this week. We already talked about Tesla. Boeing is scheduled coming out on Wednesday. Interest rates are remaining high. We're going to start to keep an eye on the residential construction stocks. We also have the brandly new name GE Aerospace, no longer General Electric, which is reporting. By the way, if you haven't even looked at GE this year, oh my gosh, are you missing out on one of the biggest bullish moves in a long, long time? Look at that. I'll bet you that turns your stomach looking at that, had that kind of move, and if you didn't catch that, right? So continuing to move down, and actually, Tom, I actually like Travelers this week. Let's actually kind of take a look at that. That group of stocks, the insurance stocks, have actually been pretty good here. Now, again, you know what's kind of fun here is we just talked about tape reading, right? So big move to the downside with the market and after earnings, right? But now we have another clue. We have another price that we could be looking for from earnings. That's where it opened up after this big gap down after earnings. Now, Tom could be looking at reading the price action here. Now, Is this a A+ trade for me? No, it's a trade where I'd be looking at it and be like, is it in this move? That would be an A+ trade for me. And any entry in this particular move, we have stacked order flow and it looks fantastic. Now, this move here is we're kind of looking to lean on the earnings catalyst, not necessarily the long-term stacked order flow. Now, that's kind of a fun conversation because what does that mean? Well, are we hopping on board where there's clearly long-term institutional demand, or are we hopping on board just simply the earnings catalyst that is not in the direction of that previous institutional demand? So this is kind of cool. We're actually going one layer deeper now into how I would allocate money to an idea like this. If that stock is trending higher and I see nice pushes and pauses, I'll be a little bit more inclined to get a little bit more increased in my position size and hold a little bit longer because stacked order flow is remaining persistent. And I have all of that buying pressure that I'm leaning on. I'm just kind of like looking for a spot to hop on board, which is what we call the optimal entry. Now, in this particular case, the stock that Tom pointed out there, it's simply looking at an earnings catalyst that is not in the same direction. So the distinction there is how much is my allocation based on those two ideas? A fantastic A+ idea, or maybe an idea that I could consider, but it's not perfect. Now, this is the big thing. Every time you move away from perfect, your allocation, the amount of risk you take on that trade should also go down. It's just smart trading. Remember, I'm not a financial advisor. I'm just here to share my experience with everybody, but that's the way I do it. Perfect, I have more conviction. I start to move away from perfect. I lower how much I want to put into that trade. So in this case, Tom might have found a stock that has a good earnings catalyst, which bounced after earnings while the market went down, but it's only 3 days worth of buying versus what we just saw was roughly 6 months of buying. Okay, I hope that everybody understands that, right? How good is the idea? And how do I know that? And what does that mean for how much I want to put in the idea? If you learn nothing else from me, I know I keep saying that, but these are all important, is to learn how to adjust your risk and adjust your profit targets based on the quality of the idea. Super important. Thank you for that, Tom. Really appreciate that. John Bates, I love you, man. I miss you. I hope you're doing well. All right, so let's continue. I want to go down. I want to give you some ideas for the market this week and just take a quick look into sector rotation. So what we talked about here, this is the big list of stocks that I'm watching. Now, again, some stocks that had relative strength last week are basic material stocks. So gold stocks, steel stocks, and copper stocks. Now, obviously, we also just talked about financial stocks. They were, quote unquote, holding the bid. American Express bounced last week, right? So now pockets of opportunity. Banks went down a little bit, but these credit companies, such as American Express, held the bid. Now, why would they? Well, interest rates are staying high, and that's how they make their money, right? So you got to put these clues together. So this is kind of how we're mapping out this week. So this week, we're looking for a short-term bounce. We're looking for the VIX to come down. We're looking for the S&P 500 to stay above VWAP, that signal that I showed you. And again, this is important. Even if you're not day trading, you still should take a quick look at that intraday chart and say, was buying pressure above the average of where the most of that volume happened? If it did, great. We're now validating the argument that the game plan that we had coming into the week. Does the S&P 500 stay above the opening price? Does it close near the low? Do we see higher highs and higher lows for this week on the daily chart? If those clues unfold in a bearish market that we have right now, I'll be looking to be a buyer. Now, there's a difference in the stocks I'll be looking to be a buyer of. Stocks that have pulled back would be lower on my list. Stocks that have stayed strong would be higher on my list. So now we work our way through those two different types of ideas, and that changes the amount of money that I'm looking to put into those ideas. So I'm going to be looking at gold, copper, steel, energy stocks this week, and financial stocks. And I'll be looking for optimal entries in those stocks as well. Okay. Covered a lot, but I'd like to really kind of give you a big chance to understand, like, how do I map the market out this week? And what does that mean for which stocks and why? More importantly, here's the clues and how does it unfold? So when we talk about this again next week, we'll have another conversation about what we saw coming into this week, how it unfolded, and then what that meant for the best trades we're going to look at. All right. Thank you so much for joining me here today, everybody. I really, really appreciate it. If you have any follow-up questions, absolutely do me a favor. Leave a comment below. I will get back to you as soon as I can. And if we did a good job, do me a favor, subscribe to the channel. It would mean the world to me. Have an awesome day, everybody. I'll speak to you soon.